We are covering these 9 top stocks with big percentage gains today. Our review on PHIO Pharmaceuticals Corporation, a clinical stage biotech company, is seeing some pretty exciting movement in its stock today. The company's shares soared by 52%, with a staggering 85% surge in pre-market trading, followed by another 40% breakout once regular trading opened. What's fueling this buzz? Well, it all stems from a significant development in their Phase 1b clinical trial for their lead drug candidate, PH-762, which is designed to target cutaneous squamous cell carcinoma, CSCC, melanoma, and Merkel cell carcinoma. The big news is that PHIO's Safety Monitoring Committee has cleared the way to escalate the dose in the trial. This is a pretty solid vote of confidence, as it indicates that the drug is not only being well tolerated but also showing enough promise to push forward with higher doses. The trial, which is still ongoing, involves a dose escalation approach to evaluate the safety of PH-762, and so far, results from the third cohort, which treated 3 CSCC patients, have been encouraging. There have been no serious adverse events or dose-limiting toxicities, which are critical signs of the drug's safety profile. What makes this even more exciting is the potential of PH-762 to provide a non-surgical alternative for patients with skin cancers like CSCC. Currently, many of these patients undergo invasive surgeries, so the prospect of a less invasive treatment is a huge selling point, both for patients and for the healthcare market at large. The results from the trial are still preliminary, but if they continue to show positive outcomes, PH-762 could emerge as a real competitor in the oncology space. However, it's important to note that biotech stocks, especially those tied to clinical trials, are inherently volatile. While today's surge is a strong sign of investor optimism, the stock did pull back a bit after that initial surge, which reflects some caution in the market. Investors are always keeping a close eye on the results of clinical trials, as these can make or break a stock in a matter of weeks or months. Overall, the hype around PHIO Pharmaceuticals is understandable. There's a lot of potential here, and today's breakout is a big endorsement from the market. But like any biotech story, it's crucial to keep track of the trial's progress and see whether PH-762 continues to deliver. If it does, the stock could see even more significant moves in the future, but it's definitely a story worth watching. Our review on SGN. Signing Day Sports Incorporated, a tech company focused on bridging the gap between student athletes and college sports recruiters, saw some explosive action in its stock today. Shares skyrocketed by 47%, with an eye-popping 115% breakout that led to multiple halts throughout the trading day. The stock even reached an intraday high of $2, but like many fast-moving stocks, it couldn't hold on to those gains. After the initial surge, the price quickly faded back down and eventually pulled back in after-hours trading. So, what's driving all this excitement? The company's platform, Signing Day Sports, is designed to make it easier for high school athletes to get discovered by college coaches, particularly in sports like football, baseball, softball, and soccer. The platform connects athletes with recruiters, helps them track their performance metrics, and provides tools for communication. With so many athletes looking for a way to stand out in the recruiting process, this type of service has a lot of potential, especially as the company looks to expand into additional sports. The breakout today may be fueled by growing interest in the platform, or perhaps even an uptick in awareness following recent moves by the company to improve or expand its offerings. But with all that hype, it's worth noting that the stock couldn't maintain its highs. These kinds of sharp movements are typical of stocks that are relatively low-priced and highly speculative, especially when they're still working to prove themselves in the market. Investors might be cautious after today's volatility. While the company does have a unique proposition in the growing digital sports recruiting space, the reality is that the stock's sharp rise and fall indicate that traders are still uncertain about its future trajectory. That's not to say there isn't potential here. If Signing Day Sports continues to expand its user base and grow its platform, it could certainly be a player in the sports tech space. But for now, it's a bit of a roller coaster, and investors will need to keep an eye on how the company's next moves play out. Our review on ADD. Color Star Technology Company, Limited, an entertainment tech company that's making waves with its innovative use of AI in the industry, has seen some wild action in its stock today. The stock shot up 45%, fueled by a 30% breakout in the middle of regular trading hours. However, after all that excitement, things took a sharp turn after hours, with the stock pulling back by about 20%. So, what's behind all this volatility? The company's platform, Color World, has a unique twist. It's not just another entertainment platform, it's focused on celebrity-led education services, covering areas like music, sports, painting, animation, and more. With an emphasis on combining online entertainment performances with educational content, it seems like a pretty intriguing niche. The idea of celebrities offering courses or experiences tied to their expertise could definitely attract interest from fans and learners alike. But as with any entertainment or tech company trying to capitalize on the metaverse and AI, the real challenge lies in execution. The early jump in price today shows there's definitely market interest in what Color Star is doing. Yet, the quick drop after hours suggests some caution. Maybe investors are taking a step back, unsure if the company can maintain momentum or if this was just a short-term hype spike. As for the future, it's still a bit of a mixed bag. Color Star has an interesting model and the potential to tap into the booming online education space, especially if it can continue leveraging celebrities to build a unique platform. But the stock's erratic behavior today serves as a reminder that, when it comes to companies in emerging tech and entertainment sectors, things can change quickly. Investors should keep a close watch on how the company rolls out its offerings and whether it can sustain the attention it's getting. Our review on HUBC. Cyber Security Ltd, the Israeli-based company making strides in the cybersecurity space, has just landed a major deal that's had a serious impact on its stock today. The company announced it won a €20 million contract with Cassa di Risparmio della Repubblica di San Marino S.p.A., a prestigious financial institution in Europe. This contract will see Cyber Security lead a comprehensive digital banking and infrastructure modernization project, which is expected to be completed by the end of 2025, assuming all regulatory approvals go through. The stock saw a huge boost in response to the news, jumping up 42% today, with an impressive 45% breakout in early regular hours. But, as with many high-volatility stocks, the price action wasn't all smooth sailing. After the initial surge, the stock experienced some big swings, but it managed to trend upward toward the end of the day's trading session. So, what does this mean for investors? Well, it's clear that this contract is a big win for Cyber Security, especially considering it's with such a well-known European financial institution. It shows that the company's solutions are gaining traction, particularly in the high-demand sectors of banking and digital infrastructure. The market clearly sees the potential, and there's a lot of optimism about how this project could shape the company's future growth. However, the swings in the stock price also show that there's a bit of cautious sentiment. While the initial reaction was strong, the pullbacks suggest some uncertainty. Investors might be keeping a close eye on the details, like when those regulatory approvals come through and how smoothly the project rolls out. Overall, it's a significant win for Cyber Security, but as always with these types of high-stakes contracts, the long-term impact will depend on how well the company executes and delivers on its promises. If they can pull it off, this could be a game-changer for the stock, but the volatility is a reminder that there's still a bit of a bumpy road ahead. Our review on MRM. Medirom Healthcare Technologies Inc, a company based in Japan, is known for its holistic approach to health through its wide range of services, including franchising health and relaxation salons across the country. The company operates mainly through two business segments: its relaxation salon segment, focusing on health management via its RE-RA-Q salons, and its digital preventative healthcare segment, which offers on-demand health monitoring and preventative services through apps like Lav and Mother Tracker. Today, the stock saw a remarkable surge, up 40%, with an incredible 65% breakout during the early regular hours. That's a huge jump and shows just how much excitement there is around Medirom right now. But, as is often the case with such volatile moves, the stock didn't hold those highs for long. After the initial spike, it quickly dropped back down, before stabilizing and trending slightly upward toward the end of the trading day. So, what's behind all this action? Well, there could be a few reasons for the jump. Medirom's strong presence in the Japanese health and wellness market, coupled with its focus on digital health applications, is certainly something investors are taking notice of. The company's unique combination of physical relaxation services and innovative digital tools seems to resonate well with consumer demand for holistic health options. However, the volatility in the stock price today shows that there's some uncertainty as well. The rapid rise followed by a quick pullback suggests that while there's optimism about Medirom's future, there may still be some caution among investors, maybe about the consistency of growth or how sustainable this new momentum is. In short, Medirom is definitely capturing attention with its holistic health offerings and digital health services, but as we saw today, the stock remains a bit unpredictable. It's definitely a space to watch, but investors might want to stay cautious and wait for more concrete signs of stability before jumping in. Our review on LUCY. Innovative Eyewear Incorporated is blending traditional eyewear with smart tech. They offer glasses and sunglasses that let users listen to music, take calls, and use voice assistants like ChatGPT, all while providing prescription options and sun protection. The company has big brand names like Lucid, Nautica, Eddie Bauer, and Reebok under its belt, covering everything from prescription glasses to sports and safety eyewear. Today, the stock shot up 36%, with a strong 25% breakout early on, but then dropped back down quickly. However, by the end of the day, there was a slight upward trend. Volume was fairly light, with only 461,000 shares traded. The rise could be tied to growing interest in the smart eyewear market, especially with a portfolio that includes 115+ patents. While there's excitement around the tech and product variety, the volatility today shows that investors are cautious. The stock might see more swings, but if the positive trend continues, there could be upside. Just be mindful of potential short-term fluctuations. Our review on TIVC. Tivic Health Systems Incorporated is carving a unique niche in the therapeutic space with its combination of bioelectronic and biologic treatments. The company focuses on leveraging the immune and autonomic nervous systems to treat diseases. Its flagship product, Clear UP, targets sinus pain and pressure, and it's clinically proven to provide relief. Tivic also holds exclusive rights to entolimod, a potential treatment for acute radiation syndrome, with plans to expand into other therapeutic uses. Today, the stock surged 33%, with a sharp 40% breakout early on, but there was a quick halt and a drop right back to earlier levels. Despite that, the stock seemed to find some momentum and trended upward by the end of the day. The volatility reflects the market's mixed reactions. While there's excitement around Tivic's potential, especially with its diverse pipeline, the fluctuations show that investors are still weighing its long-term prospects. The rise could be linked to optimism around the company's bioelectronic and biologic strategies, particularly its work with entolimod. While it's not unusual for smaller biotech stocks to experience these types of swings, if Tivic continues to make progress in its clinical trials and maintains strong product performance, there's a solid chance for sustained growth. Keep an eye on how it moves in the next few days to gauge investor sentiment. Our review on WXM. WF International Ltd is a company focused on providing HVAC systems, floor heating, and water purification solutions. They're heavily involved in large-scale commercial projects, handling everything from sales to installation and maintenance. Their expertise is in creating climate-controlled environments for offices, hospitals, airports, and more. It's a business that plays a crucial role in maintaining the comfort and safety of high-traffic spaces. Today, the stock saw a sharp rise of 28%, with a notable 55% breakout around midday. But as is often the case with these moves, it quickly pulled back, returning to more familiar levels. Still, it managed to regain some of those gains by the end of the trading day. It's clear that there's interest in WF International, likely due to its role in key infrastructure projects, especially as the world continues to focus on energy-efficient and sustainable building solutions. This type of volatility is common for stocks in the industrial and construction sectors, especially those involved in large-scale projects where deals and timelines can have big impacts on stock price. The recent spike could be tied to positive sentiment around growth in the sector or expectations of big new contracts. If the company continues to deliver on its projects, investors could see more upward momentum in the future. Just be aware of the potential for sharp swings as market sentiment shifts. Our review on IPDN. Professional Diversity Network Incorporated is all about creating access, whether it's for women, veterans, the LGBTQ+ community, or professionals of diverse backgrounds, through job networks, training, and education. They run both online and in-person platforms, and their reach includes everything from targeted career sites to remote more, which connects companies with software engineers. Now, let's talk stock movement. It was a bit of a roller coaster today. PDN surged out the gate with a strong 75% breakout early in regular trading, but just as quickly, it took a sharp dip, giving back much of those gains. Still, by the end of the session, it started to claw its way back up and finished the day up 25%. These kinds of moves usually signal that something's stirring beneath the surface, whether it's fresh attention from retail traders, renewed interest in diversity-focused platforms, or just momentum chasers reacting to low-float volatility. It didn't seem tied to any hard news, but the action today tells us PDN still has the ability to light up the board, especially with its mission resonating in today's corporate environment. If they land a major partnership or drop solid numbers in the coming quarters, today's spike could be a preview of what's possible. But just like with any volatile play, it's one to keep an eye on, especially for those looking to balance purpose-driven investing with high-risk, high-reward setups. Please subscribe, give the video a like, and watch more from our playlist. Thanks.